up, motherfucker?
Yo, what's up? What's up? What's up? Okay, let's see. All right. Okay, everything's working. All right. It is 2026, April 22nd. All right. Um, so this year was the fire horse year, right? And I was talking about like 1966. Like there was a lot of things that happened in 1966. That was the last time we had a fire horse year. This is the year of the fire horse. Um, we had a lot of inflation that was coming up, well, was creeping up because of the Vietnam War. We had high interest rates. Okay, that caused a credit crunch, and there was some credit issue in the markets during that time. Some banks couldn't do certain things. There was some kind of liquidity issue there, and I mentioned that in some stream way back in like January, right? When there was like a Lunar New Year's. And I said, like, watch it happen again. So why did I even bring that up? Why is there a relationship with the Lunar New Year and all that? Because Lunar New Year, it works on a 60-year cycle. You have to know that. Of course, every animal comes back every 12 years, but every 60 years comes back the element. So, you got like wood, fire, iron, blah, 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 water, earth. And you also have the animal. So it happens every 60 years. And every 60 years, something happens, okay? Because a Russian scientist, an economist, recognized there was a 45 to 60-year cycle in the economy, okay? Because he was trying to predict the collapse of capitalism. That's why he was doing it. Eventually, he got sent to the gulag by Stalin. He got sent to prison, and his health deteriorated, and he eventually died. But yeah, that was a very important work. One of those important works about cycles. Okay, that was done on economics. So let me just read the Wikipedia article. So let's remind you. Okay, Okay, let's look back at 1966 first. So I got AI to summarize it for me. I read a longer article before, but I'm not going to go over that. I'm just going to let AI give me an answer. So what happened in 1966? 1966, an economic crisis, often called the credit crunch of 1966, was a significant post-war liquidity crisis driven by rising inflation from Vietnam War spending and tightened monetary policy. Well, we have a war, we have tight monetary policy. We have those two ingredients right now. So even before the Iran stuff, it looks like we're right on schedule. Something is happening right now that's matching what happened in 1966. Federal Reserve raised interest rates, causing a sharp drop in bond markets, a 22% decline in the S&P 500, and a near panic in savings and loan associations, which the Fed then had to stabilize. Savings and loan crisis also happened again in the 1980s. Okay, this was the kind of like the last, um, I suppose, sort of major recession in the late 1980s, early 90s, before we had the big boom with the dot com, right? The whole technology market started helping everything out, and everything went up after the Gulf War number one, the first Gulf War, Operation Desert Storm. Okay, so looks like there's a lot of similarities. Okay, that's why we kind of have to look at this. Let's see what's going on here. Okay, we got strong inflationary pressures prompting the Fed to tighten credit. So we're going to get a new Fed chair in May. So I don't know, but Jerome Powell probably will not resign from his position as a board member. Okay, board member. So then he might be in the shadows trying to influence policy in the Federal Reserve still. Prime interest rates rose from 4.5% to 6% in 12 months. I don't know if that's going to happen. I don't know if the Fed's really going to be that crazy to raise interest rates. That's probably not going to happen. But they might keep interest rates higher for longer, which will affect things. Okay, if it starts causing problems with the employment and people not getting employed. I'm not sure with the AI stuff. It kind of makes things a little bit different as well. Okay, that's also going to be interesting. All right. And let's see what else here. Anything. Depositors withdrew funds from savings and loans to invest in higher yielding assets. Oh, is that what they did? Okay, so they got out to buy more bonds. Let's see. S&P fell 22%. Okay, that could happen, right? In early 1966 to a trough in October. I think, yeah, there's going to be some kind of movement from July into October for sure. So, if the market really rallies up, I think we can get to 7,500 on the S&P 500. Okay, that's my target right now. I think Samantha is targeting 7,300, so I'll play her video, which aligns with Tom Lee's thing. So they're going for 7,300. I think it's possible it could even get to 7,500 with the way things look right now. Semiconductors still very strong. Can't do crap about it. Okay. Eventually, let's see, Fed was forced to act as lender of last resort to save municipal bond markets. So the local government bond markets, basically city bonds and state bonds, were starting to go down. Okay, that's what happened. While it did not cause a major recession, it was a mini recession that exposed the fragility of the financial system, representing an early verification of Hyman Minsky's financial instability hypothesis. I think he got a Nobel Prize or something. I'm not sure. I don't remember. Did he get a whole Nobel Prize for it afterwards? Whatever. But yeah, the credit crunch of 1966. Now, what's also interesting is that this was the time when Republicans started gaining a lot of seats in the House, the Senate. Well, not the Senate really, so mostly the House. And then they had a lot of governorships go swing back to the Republicans because at this point you have to remember this was B. Johnson's time, right? They had JFK got assassinated. He became president. Then he got reelected, okay, in 64, and then he got a lot of legislation through. Okay, he got a lot of his great society projects and things, and he got two constitutional amendments passed through as well. So there was a lot of democratic power during this time, and it suddenly started flipping over to the GOP because of the war in Vietnam. So a lot of anti-war people started defecting over, causing disruptions in the Democratic Party. The Democratic Party starts splitting up into different factions. One faction went with RFK, okay, father of RFK Jr. So, and another faction, someone else, I don't remember. I wasn't born at that time. I barely know too much about that history. I know there was a lot of crazy crap that happened 2 years later. You have to remember there was a Tet Offensive, so the Vietnam War um, really got heated up, and the Vietnamese purposely did that huge attack on the election year. So that was around late January, right? And then after that, RFK, I think, got assassinated, and then a month later after that, so what, he got assassinated around March, and then after that, April, Martin Luther King got assassinated. So there was a lot of social upheaval. It was very easy to really shake things up during that time. Very wild time. So I don't know. We if things repeat in a way, I mean, nothing happens in history exactly the same, but they do have kind of a rhyme. Okay, they don't exactly repeat exactly, right? But they have a rhyme. There's some kind of impulse where there's certain moments in history where there's a lot of social upheaval. So I wonder if we are beginning to get into that. And of course the hippies started around 1965 and got the movement really got going into 1967, summer of love, blah blah blah. So there was a lot of things going on, and now we have this AI and people getting pissed about AI replacing jobs, and who knows what people feel like right now. We haven't really felt the full effect of higher gas and food prices yet. Food prices are already going to go up, right? People are already feeling it. They will go up a lot higher after the gas prices go up. You already got the gasoline prices already rising. Wait till summer, and then wait until late this year into next year. Food prices are going to be astronomical. And that's it. Yeah, that's it. I wonder if we're going to get that crazy idea of universal basic income. Elon's always pushing for that. That might have to be the case. I don't think people are going to survive in the coming years. Okay, so this dude here, this scientist or economist, Nikolai Kondratiev. Okay, he was the one that came up with this theory here called the Kondratiev waves, also called supercycle, great surges, long waves, K waves, or the long economic cycle, are hypothesized cycle-like phenomena in the world, a modern world economy. The phenomenon is closely connected with the technology life cycle. See, that's key. So he was tying it to the advances of technology affecting economics, and we're going into the AI era. So this is probably, you know, was predicted that there are waves of economic changes due to technological advances. It is stated that the period of a wave ranges from 40 to 60 years. The cycle consists of alternating intervals of high sectoral growth and intervals of relatively slow growth. Long wave theory is not accepted by most academic economists. Among economists who accept it, there is a lack of agreement about both the cause of the waves and the start and end years of particular waves. So we kind of discussed it last stream. Okay, we can kind of see that there is some sort of cycle, right? People recognize their business cycles. Nobody denies that. But here's the question: where's the start? Where's the end? And it fluctuates between 40 and 60. What exactly is the thing? It's not a stable cycle, okay? Because you have to understand that the system we're studying is not a linear time invariant system. So if you know anything about engineering, this is what they teach you at the beginning. You analyze linear time invariant systems. So if I design an airplane, what tools do I have? Most of the tools that they teach mechanical aerospace engineers are things that solve linear time invariant equations, but that's not true, right? What we have are nonlinear time invariant realities. If I have an airplane going around with turbulence and all this stuff, that is what? No, 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 no. So when you solve an engineering problem, you kind of simplify your your work, because you have to say, well, the most of the time the plane will act like this because this is the normal condition. There will be times when there are not normal conditions. All right. And well, I'm not a mechanical or aerospace engineer. You have to ask them how they would do that. Okay. Like if I send a rocket to space, the mass of the rocket changes over time, right? When the fuel is consumed, the rocket gets lighter over time. It's changing over time. So something is changing over time. That's a problem. That makes it not time variant. It's also probably not linear because there's going to be deformities in how the atmosphere affects the speed. This thing just makes it worse, right? The reality is it's a hard problem. So the same thing with trying to figure out what the hell, how do I use this to predict the future? Because there's a lot of variables that are not linear, that are not time invariant. Okay, they change. So that's the thing. But for now, we can see that there is some kind of 45 to 60 year cycle, and I think we can kind of see it here because there was a repeat of this event 60 years ago. Okay, and that's probably why those Chinese astrologers always go with the 12 and 60 and whatever. They noticed there was something going on, and that's where you get all the woo woo and the new age. Like, oh yeah, I can predict certain things based on the day or time that you get married or whatever. They start making up shit like that. I think all this stuff was based on some kind of reality in the past. People notice certain things, but they kind of assume that it'll affect you in certain ways, because if they see some kind of changes on the seasons, the weather, then they assume well, if the moon and the sun and this and that, it changes the climate, it changes this. I see I can grow crops better on this year and that year. Then I can predict also if you're going to be happy with your marriage if you marry at this time, right? So you start having people just make up stuff based on something else because they see it working for predicting crops, because a king can only stay a king if they can predict when to grow crops, right? Correctly at certain seasons. That's why they have a priest caste. So you have in Egypt, you have like a class of people that can predict certain things to keep the order of civilization. Because once you have an agricultural system, you need to be able to plant so you can get enough rice, bread, all that stuff. If you can't do that, the people will revolt and kick you out, right? So that's why keeping time and understanding seasons and climate and all that matters. Anyhow, so I think it's based on some kind of reality, but how do I actually get this to work for me is another question. So that was what we were doing last stream, kind of discussing that. Okay. All right. So right now, I see these cycles here. Okay, so this one is for semiconductors. Okay, there are two cycles I see. One cycle is the 146. Okay, and these are like 78-minute data. Okay, every data point is for 78 minutes for this one. And I see a 146 and 300. Okay, the 300 started getting more and more dominant this year. Okay, so like late last year into this year, this one started becoming more and more dominant, more prevalent. According to the old 146 cycle, which was what I was using last year, it seems that like it tells me that we should be done now. Semiconductors should be going down now, right? Well, it hasn't gone down the last couple days. I don't see anything weakening. Well, if the 300 something cycle is more dominant, then we still have till like early May before we have a top. So we have a bit more to go. Okay, according to this. Next week we'll have Powell. We'll have a lot of big tech earnings. That'll be something to watch. If we do survive that, then we got a little bit to go. We could go. This doesn't mean it'll turn down right away in early May. We could go till like mid-May before we have any problems. You know, this could shift. This could shift, and then we could totally ignore the 146. This cycle no longer matters anymore. This has less and less influence as we continue on. It had pretty good influence up until April, but it looks like this is done. Maybe this cycle no longer matters. You see, so there's multiple cycles influencing things. So when do we shift? This is what I'm saying. It's not a linear response. I can't just use one cycle and stick to that. There's so many cycles and they move and they shift. They don't stay the same. I have to continuously monitor and go like, well, this one's becoming more dominant. I better ignore this one. This one tells me to sell. This one tells me to keep going, keep holding. Okay, so now I'm going to look at the S&P. So this one's the S&P. It also has similar, because now the semiconductors are so dominant. You see now the S&P is following it. The S&P also had like a 146. You see that as a second uh thing. So this is the Nasdaq. So this one is the S&P. So I am going to ignore like the 140s, okay? The 140. You see that? The 140 says like, you see how strong the damn semiconductors are? Now it's influencing the whole market now. And right here I'll show you these tweets. Current momentum in US semiconductor stocks is historic. The semiconductor index has rallied for 14 consecutive trading sessions, the second longest streak in history. The index is on track to exceed its record 15-day stretch set in 2014. During the current streak, the S&P, the SOX semiconductor index has gained 34.4%, the strongest 14-day run since 2002. So that was like, I wonder if that's just before the dot-com bubble popped. I forgot. Okay. Anyhow, as a result, the semiconductor index relative to the S&P 500 is up to 1.35. So that's the ratio, okay? That's the ratio. You take the semiconductor index divided by the S&P 500 index, and you get 1.35. I'll show you that in a bit. The ratio is now 42% above the 2000 dot-com bubble peak of 0.95. Yep. Semiconductors right now, the performance of semiconductors is a lot higher than it was during the dot-com bubble. Okay, and I told you, bubbles are a great time to make money. Great time to make money. The only problem is you don't know when it ends. So you don't want to be the guy to be buying at the end of the bubble. If this bubble still has legs, which I think it will, okay? I think what's going to happen is we're going to go all the way up to 7,500 in the S&P into June, maybe July. And then we go back down in October. People think it's the bear market. They'll get very bearish into October, November, okay, just before elections. And then once the midterms are finished, then we start going back up again, really crazy. We're just going to keep going like nutso, bonkers. We might even go to 8,000 plus on the S&P. And the semiconductors is probably going to be, well, either the semiconductors are going to keep going up or the software is going to take over for it. I'm not sure yet. Semiconductors might be over. So this might be the last move of the semiconductors, and it'll be stopping, it'll cap out there. And then the software ones will start taking over, and the biotechs will take over into next year. Those are the two sectors that'll take over for next year. Okay, here's another one. Semiconductor stocks now represent a record 13% of the total U.S. Stock market cap. This share has more than quadrupled over the last 4 years. That's right. That's right. Since COVID, semiconductors has really just inched its way up to being more dominant in the S&P 500 to the point where now, if you look at the cycles, they all follow the semiconductors now because of this. So you don't even need to look at the S&P 500, NASDAQ 100. You just need to look at semiconductors. If semiconductors does well, then you know the index will do well. Everything else is irrelevant right now. Semiconductors is the one that's really pushing this. The percentage is nearly twice as high as during the 2000 dot-com bubble peak. Meanwhile, the semiconductors ETFs, SOXX and SMH, are up 33% and 24% year-to-date, respectively. Is the U.S. stock market in a bubble? No shit, it's in a bubble. Yeah, it's in a bubble, but so what? So look at this. The S&P 500 information technology sector and the NASDAQ are trading below their 10-year average for PE multiples. This was like last week. This reset provides a more constructive entry point in equities, particularly across large cap quality growth. So if we just look at COVID, from COVID until now, it's cheap, right? It was cheap at the end of last month, okay, at the bottom there. But when you look at it from Warren Buffett's point of view, he will not buy something that's 20x forward price to earnings ratio. To him, that would be way too expensive still. But relative to the COVID-19 market, because we live in a different market since COVID-19, okay? There's pre-COVID-19 market and post-COVID-19 market. There's pre-2008 market, post-2008 market, right? There's pre-dot-com, post-dot-com, bubble market. So every market has a different flavor. The flavor we have now is that like anything at 20 forward PE ratio is quote unquote cheap for technology stocks, that is. If you told someone that Exxon Mobil or Chevron is 20x, nobody would buy it. Okay? But if there's any technology stock that's 20x, they'll be like, that's cheap. It's technology. I'll buy it. So people have a different expectation for different companies too. So for them, that's cheap. If it's 30, it's expensive. For anybody like that looks at the whole market as a whole, they'll just be like, I wouldn't buy any of this trash. It's all expensive to me, but it doesn't matter. All that matters is as long as you have the money printer going, as long as the Federal Reserve is still giving you free cash, you're going to use that cash to buy stocks, and they'll just buy it up. And that's what's happening now. They're just chasing it. They don't care anymore. They just want to buy everything at any price now. At this point. Okay, that's why it doesn't matter about taco, not taco anymore. Everybody knew Trump was going to taco. And it was actually pretty funny because like the Iranians didn't even want to have a ceasefire, but Trump's like, well, okay, we didn't meet in Pakistan, but we'll have a ceasefire anyway. So it was a unilateral taco. He just decided to taco by himself. and whatever. So right now you could look at the news and the Iranians are shooting at boats. Right? Yeah, I think they captured a boat and they're shooting at boats, but nobody cares anymore because Trump says we won't fire at you. You can fire at all the boats you want, but we won't fire at you. So there is no resolution in the war. And I guess that's okay because if it was resolved, maybe the market wouldn't go up anymore. Because it's not resolved, people keep betting on the market to go down. That gives enough fuel for the market to go up because if people have puts that they bought as insurance because they think like there's some bad news coming around the corner, that's what's driving things. So if people bet that things are going to be bad, it'll just keep going up anyway because nothing's happening. So I think we still have till July. We're fine. We're safe. Just as long as nobody has a really bad earnings. Please don't have bad earnings. I think Tesla right now is going down, so I don't know. But everything else is okay. The weight of AI-linked companies in the S&P 500 has surged to nearly 45%, underscoring the growing dominance of artificial intelligence in U.S. equity markets. Okay. According to Goldman Sachs, posted by the Daily Chart Book on X, the share has risen sharply from around 25% at the time of ChatGPT's launch in late 2022, reflecting a sustained re-rating of companies tied to AI infrastructure, semiconductors, and platform ecosystems. The expansion highlighted how investor capital has increasingly concentrated in a narrow set of large cap technology names benefiting from the AI boom. Yeah, right? Like Micron, SanDisk, right? They love memory still. They still buy that stuff up. Goldman Sachs analysts showed a steady climb in AI related index weight through 2024 and 2025 with only brief pauses, suggesting that the trend has been both structural and momentum driven. The shift has been fueled by strong earnings growth, margin expansion, and elevated expectations around long term productivity gains from AI adoption. The concentration raised both opportunities and risks for markets. While AI leaders have driven index level returns, the growing dominance of a single theme increases sensitivity to sentiment shifts and valuation pressures in the sector. The sharp rise in AI weighting signals a significant transformation in index composition, with artificial intelligence now accounting for nearly half of the S&P 500. So that's what I was mentioning yesterday. I was saying like, dude, bro, semiconductors and all the other related technology, quote unquote, hardware, optical, uh, like Dell, even, right? Like Dell, like anybody that just makes a lot of related racks, hardware, semiconductor, anything with AI in terms of broad hardware is nearly 40 something percent. So we're at 45, close to 45% today, compared to 25% when ChatGPT was launched. Okay. I don't know why this guy made like had this blurry picture, but they should have did a better job getting a higher quality. But I think you can read it, right? So 25% here at 2022, November 2022, and now all that semiconductor hardware, et cetera, everything is 45% of the S&P 500. So if you buy the S&P 500, you're just nearly 50% of that thing is just Micron, like Micron and some other stocks. That's it, bro. If Micron goes down, holy crap, you're screwed. The whole index will just collapse. Do you said yes? I said Air was pegged to Tesla. So I'm gonna watch tomorrow to see what Air does, but I don't think Air is gonna follow Tesla too much. I think the AI thing will just push Air back up. So I'm looking at where to buy Air. AEHR. Correct. So let's see. Let's see what happens tomorrow. So if Tesla isn't doing so hot, because I think it was up. Like that's why when I screenshotted the thumbnail, it was up, but I think it went back down towards the end of the post aftermarket hours. So Elon must have said something that they didn't like. So who knows? Yeah, it went back down. It lost everything. It was up 3 something percent. Now it went back down. So I don't know. Whatever. We'll see what happens tomorrow. Let's look at Micron. Micron alone is responsible for 51% of the entire S&P 500's earnings per share revision since the war began, according to Goldman Sachs research. MU's consensus EPS growth estimate for 2026 stands at a staggering 605%, with its EPS revision since February 27 coming in at 93%, nearly doubling in just weeks, as the semiconductor demand surge tied to AI infrastructure and defense tech spending filtered through analyst models. You know what was funny? Like last night, we had Korean inflation numbers for the PPI. Korea's inflation was like 1.6% month over month. Bro, Korea's inflation is so high. It's going to be so high. But Hynex, SK Hynex reported earnings last night too. So that's why you see the Korean ETF pump up to this morning, because like memory is still going up. The memory demand is still going up. So all the memory stocks today went up with it. Okay, so it doesn't matter. People don't care. Inflation goes high. Who cares? People still need to talk to ChatGPT. They'll pay anything to get ChatGPT. So that's kind of like how people feel right now. Goldman Sachs has already flagged Micron as a standout ahead of its earnings, raising its own 2026 EPS estimates 19% above consensus. Outside of Micron and Broadcom, AVGO, in Infotech, the remaining top contributors are almost entirely energy companies. So outside semiconductors, it's only energy. So ExxonMobil, Chevron, ConocoPhillips. So all those energy stocks that went up in the past 2 months, now that all the semiconductors have went up again, like the S&P 500, if you just bought the S&P 500 and didn't look at what's inside the S&P 500, you're basically just buying oil, gas, and semiconductors. Like those are the only things in the S&P 500 that matters. Every other stock in the S&P 500, like Nike, okay, that doesn't matter. Lululemon, blah, who cares? Lululemon and Nike could keep going down into next year and it wouldn't matter a damn. The S&P 500, as long as Micron keeps going up, as long as ConocoPhillips keep going up, that's it. Those are the only two sectors that matter here. That's how crazy it is. So oil, gas, chips, that's it. Everything else can go to zero, can go bankrupt, and it wouldn't matter. That's how it is. Anyway, ExxonMobil and Chevron together contribute 24% of the indice's EPS revision, with revisions of 44% and 67% respectively since February 27. Occidental Petroleum, OXY, posted the most dramatic revision of any energy name at 251%, albeit contributing just 2% to the index level revision due to its smaller weight. So Oxy is still a very tiny portion of the XLE, XOP ETFs, but its earnings revision now is up 251%. Oxy can go up 3x, 5x, and then it will start dominating the whole S&P 500. Okay? Albeit contributing just 2% to the index level revision, blah, blah, blah. ConocoPhillips, Valero, and EOG Resources also feature prominently, each contributing 3 to 5% of the total S&P 500 revision. So this is where we stand, man. This is where we stand. Everything's going to go wild. Okay, I'm going to talk about this later. Okay, I already talked about that. I'll talk about that. All right. Okay. All right, let me read. I have to wait for the dip. I don't know when the dip is going to happen. There's going to be what I'm thinking. There's going to be a small dip, a tiny dip right now. I don't think it's going to be a big dip anymore. There's going to be no big dip anymore. Semiconductors will prevent any big dip from happening. So there's going to be a small dip, I think, into Powell. And we have to get ready to buy when Powell starts talking and yapping. That's what I think. We have no choice now. You got to buy. Yeah, I wish there was a better dip because Oracle went up today. Palantir went up. So I was like, what? There's no dip. There's still no dip. Boo. Semiconductors is still juicing everything up. Like it looked like there might have been gonna be a dip, but it looks like that went away. Like yesterday, I was like, well, is there gonna be a dip? And then I looked at today, I'm like, looks like no dip. Nothing. Because Bitcoin started going down a little bit, right? At the end of yesterday. And I was like, okay, let's see. And then it started pumping back up. Or 2 days ago, I forgot. And then it started pumping back up, and I'm like, looks like no dip. If Bitcoin doesn't dip, then I don't think anything else will dip. That's bad sign. That means everything's going to pump even higher now. So HUT will go higher, right? Yeah, MSTR went up 9% today, so that's going to be big. All right. Okay, so Eric wants me to talk about this. I can't help you with this. This is a penny stock. You can't analyze that. That's just a lottery ticket. You just buy and pray. That's it. I played maybe a few of these before. Like I forgot. There was like one that was like there was a Dunkin', not Dunkin' Donuts. There was a coffee one I thought that went stupid, and there was like a pharmaceutical one that went bankrupt. And then you could play it for like, oh, it goes up like 200% one day, and then you get out. You don't come back. Like shit like that. That's just like, yeah, that's just a lottery ticket. Like you play it for a lottery ticket. So what's gonna happen is that when they tell you what the final deal is, you don't know if it's gonna be like, oh, all the shareholders get to keep their shares or not. Everybody who's in there is just playing for like a quick pump, and then they leave, and then it's just gonna dump when they get the news. The news is gonna be like this: anybody holding FLYYQ is not gonna get their money back, and then it's gonna go to 1 penny, and then get stuck there, and then it'll stop trading. They'll shut it down. They'll basically like, you can't trade it anymore. So if you leave it until then, you're gonna have these shares that do nothing. You're gonna have these shares that are worthless, but you can't sell them because nobody wants to buy them, and then you're stuck there. So that's what happens in bankruptcy. So yeah, it's just all of that is just gambling, pretty much. You can't analyze that still. Yeah, yeah, I want a dip because when there's a dip, then I know how high it's gonna be. But there is no dip. Yeah, zombie shares. That's what happened. Like the Russian shares. People bought a lot of Russian shares during the whole Russian thing too. They were buying a lot of Gazprom. Okay, they were buying a lot of Gazprom because Gazprom, before the whole Russian-Ukraine drama, is a big oil and gas company. It makes a lot of money. So when you see Gazprom trading at like a few pennies, you're like, that's cheap. That's cheap. I gotta buy Gazprom. And then all of a sudden they shut everything down because you're not allowed to trade it in the US or the EU and blah blah blah, and you're trapped. You're trapped. So that's essentially what happens to bankrupt companies too. Like it's rare that they let you keep your shares. It can happen. It could happen, but you don't guarantee it. Most people that are playing it, they're just playing it to gamble. They get like a few 200, 300, 400, 500%, and they get the hell out. And that's the end of it. There's no way for you to do anything with it. Like I can't tell you anything. It's just a lottery ticket. It's pretty much just event driven until the final news gets released. You don't want to keep playing it into the actual news, because the actual news will be like, okay, here's the contract. Anybody that owns Class A shares get this. Anybody owns Class C gets this, blah, 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 whatever. And it goes down the list, right? Bondholders get this, and that's the deal they make. So, that's how it goes. Yeah. Anyhow, yeah, I've been watching software all this week, waiting for a dip. Yeah, nothing. I see nothing too. Like basically Trump made a permanent taco. There's nothing we can do now. He basically said, I'm going to taco myself. Iran doesn't want to let me taco, but I'm going to force the issue and say, I'm not going to shoot at you guys. But like right now, the Iranians are shooting at ships, but nobody cares. So I guess the thing is that like Trump right now doesn't give a crap about Hormuz. He's like, well, all the shipping has went around them, so we're just gonna keep blocking them, and then they can shoot at whatever ships they want to shoot at that are already inside the Hormuz Strait. But anybody that already got out, got out. Anybody's still stuck there inside the pool, they're screwed. They can stay in the pool until this is resolved, and that's it. So he's kind of like doing it like that. And that doesn't matter, right? As long as the Iranians can't shoot are not shooting at the Gulf states, I guess it doesn't matter. I heard like Dubai is the UAE is asking Trump to bail them out now. So are we gonna have to bail out the UAE because nobody wants to be in Dubai and their economy is now shit and we have to actually pay them? Is that where our taxes are going? That's crazy, bro. That is wild. Anyhow, you want to buy a penny stock? Buy this one. Fannie Mae and Freddie Mac right here. This is a penny stock I like because they're going to eventually go IPO and go back to the open market again. This thing. Okay? So it did dip in March to around $3.50 and it went back up to 6 and 7. I think eventually it'll get out of here, you know? It'll get out of this thing. So let me do this. Let me go do the longer term chart, 20 year or something. So it was like in 2022, it was like 30 cents, 40 cents. Okay. It went up to $10. It's pulling back. It pulled back to 3. I like that. I like that. Now it's at 6 and 7. Watch this one. You want a penny stock? This one. This one has not done anything since the 2008 crash. Okay. All right. It's going to get bailed out by the government. I mean, it's already bailed out by the government, but it's up to the government to push it back out into the open market. So it has to re-IPO again. So if you buy this early, you'll get it before the IPO price. You know what I mean? So this one actually has a future. Okay. You want a penny stock? Get this one. So this one. So FNMA and FMCC. So I think this is Freddie Mac is FMCC and Fannie Mae is FNMA. And right now they want to juice up the housing market. So there's going to be a housing market pump, one last pump in the housing market, and they're going to IPO these two suckers. So when the interest rates they start reducing, they're going to try to pump the whole housing market. So let me give you this. Okay, similar looking chart, right? So this one went to 34. Now it's 6, 7. So you can buy both of them. Okay. So this one had to be taken to the pink sheets, and then the government had to bail them out. So it's been going nowhere in penny land, right? It goes from 30 cents, $4, 30 cents, went up to 12, 10. Eventually it's going to get out of this zone, okay? And it's going to go back up to like what, $170, whatever. I don't know if it'll go up in time before the economic recession, but maybe you can get in, hope and pray that it'll get out, and then you can make a 10x, 20x, 30x before anything goes wrong. I don't know if it's going to be 20x, 10x, maybe 5x. I don't know, something like that. You'll get something. So yeah, but yeah, I have a lot of things that I want to look at. This is like the mortgage and loan companies. So this month they've been trying to recover. So buy now, pay later, Affirm recovered. I heard people are doing buy now, pay later for groceries. So anyway, $42, $66. They're coming back. They're coming back. This was really a bad place to be for the last. If you look at the last 6 months, look at it. They've all been trashed. So only one of them here, Lending Club. So most of these, like buy now, pay later, loan companies, Rocket. So these housing loans here, Rocket, Lending Tree, Zillow also does some loans. Upstart, I forgot what kind of loans they did. I think they did AI driven loans, like the AI would manage loans for people. SoFi, I think, is popular. People, somebody mentioned SoFi, and they were like praying that it would get to $30. So I don't know. I might be interested in these again because they look like they're recovering. Okay, so this last month, so this might be a place to hide out too. But it is too early for a lot of these financial companies to be serious about, because if the economy is going down, this stuff is not a good place to hide. Honestly, this might just be something that I'll hold for a year and get out. I don't know. We'll see. And yeah, there's a lot of speculative stuff here. Let me mention this one for you. Um, this one, marijuana. So this one, MSOX, is 2x leverage marijuana. Okay, this thing has been bouncing here to like $2, goes up to $2. And I don't know when it's gonna escape this, when it's gonna really break out. It's gonna take a while. So this is speculative too. So if you want something like penny stock, this is the ETF for you. This is like a ETF of penny stocks. These are all US marijuana stocks in one ETF. And this is 2x leverage. So MSOX. So if you think it's ready to roll, yeah, just get this and see if it goes back up to $100. $4 right now is not a bad price. If you get to $3 or $2, yeah, you could try get some shares and see if it goes. So there are plenty of things. If you want to buy something speculative, I gave you some right now. Marijuana. They're all penny stocks because everybody's just waiting for the laws to change. Okay, that's one. The other one is Fannie Mae, Freddie Mac. They're stuck in conservatorship. The government is holding them inside conservatorship. Eventually, they will have an IPO and they'll go back to being public companies. When that happens, if you get it early, when it's like $7, $6, $5, um, when it goes IPO, you could probably get out when it goes IPO. Be like, oh shit, it's a $20 IPO. I'm out. So you bought it like $5, it goes 20, or you could hold it and see if it goes back up to $70. You could 10x it. There you go. That's another option. So yeah, you don't need to do Spirit. There's plenty of gambling stocks you could try. So those are the ones. Plenty of stuff like that. Okay. Spirit is just like, well, shit. You gotta wait every day for some news, and then you don't know if it's like, oh crap. Do I stay in? Do I get out? At least with marijuana and the other two, you could stay in there and hope for the best in the next 3, 4, 5 years, right? And they don't care about oil. Okay, they don't care about the price of oil, the Strait of Hormuz, or anything like marijuana. Marijuana is just based on like the new laws. If the FDA gonna do, if they're gonna change anything else in the FDA, are they gonna have banking regulations change so that marijuana like companies can do regular banking instead of shadow banking? And then this one is just based on like, can it get out of conservatorship and it's ready to roll for the next wave of housing. So if because right now, not a lot of people are buying houses. The number of sellers in the market for housing is very high compared to buyers. Okay, the housing market is not very strong right now. If they want to juice it up, if they want to really juice it up, they get these companies out and they issue more loans, and we can have another 2008 bubble. Why not? Just add on top of the AI bubble. Just bubble everything. Everything can be a bubble, and then we could just roll all the way up, and then just before it pops, we just cash out and we'll be done, right? That's how you make your money in a bubble. Okay, you know how these guys think. They all want that stuff. So okay, I think I covered everything I needed to cover here. All right, so let's get back to this. Okay, gamma, what's up with the gamma? So gamma exposure by strike. Gamma flip line is 705 on the SPY. We're at 709. I don't know where I took this screenshot. What time was it? It was today at some time, 9:37, I guess this morning. And then we have SOXX. The gamma is 395.5, and we're way above it at 428.5. So remember this number, 395.54 SOXX, okay? And I'll get back to that. Here's what we see with Bitcoin. Okay, this is what I see right now. I got like let me get rid of this. Okay, so I got my 1, my 2, my 3, my 4, my 5. Okay, this is my Elliott waves right here, 5. I got A, B. There's gonna be an A, B. Okay, and I'm gonna wait for C. When C happens, that's when I tell you buy HUT, buy MSTR, maybe. Okay, but HUT is number one. HUT is the best one right now because if you look at that, let's look at speculative. Let me see speculative. Did I put HUT in this one or this one right here? HUT. HUT in 1 month right now it's 70%. Okay. MSTR didn't even catch up really, right? HUT, if I went from bottom to top on HUT, it's like nearly 100%. If I went from the bottom to the top on MSTR, it's around like what, uh, 40%. And then if I did leverage, that's only 80%, right? If I just did HUT, I think I still outperformed the leverage MSTR. So I'm still not sure if I want to recommend MSTR compared to HUT. Okay, I'm still thinking about it. But HUT is my priority. So AHUT, and then you have IREN, IREN, and then Core Z, CORZ, right? So that's what I got to figure out. So I'm waiting for this thing to complete 1, 2, 3, 4, 5. So this is 40-minute chart. 1, 2, 3, 4, 5, A, B, C. Once I get my C, I'll know that's the time to buy, and I'll look at what price HUT and all the other ones are in, and then I'll have to see which ones to get. Okay, so we're waiting for the dip. All right, waiting for the dip. I don't think Bitcoin is just gonna zoom up again to 81,000. You see, the target was 81,000. It didn't make it for this 5 wave. It didn't make it. All right. If I did the 240 minute, so that's the other thing I'll use for Bitcoin is 240 minute. Okay, right here, you see it's already 5 wave and it's already hit its target, 78, 78.8 K. So it kind of already hit it like last week. All right. And it pulled back a bit and recovered already, but it just hit it again and now it's pulling back. If this thing really can't make it through 78, then I don't expect it to go up to 90 or whatever. Yeah, my next target will be 90, 92, 90, 92, or 100K. That'll be the next move. But right now, we have to see if it's like gonna do it now, or we gotta wait a while. I think we have to wait a while for Bitcoin. Anyhow, let's look at the semiconductors. Okay, so let me look at the semiconductors. Let me look at 78-minute chart. All right, so let's go back here. SOXX. Remember this number, 395.5. So when it went from the red to the green, what happened is that now everybody buys the dip. Once you get past the red zone, every time it dips, people buy. Every time it dips, people buy. It keeps going up. It keeps going higher, 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 higher. You see this blue? This is where the wall is, the next wall. Because once it blew past the 410, the next big wall is 450. Okay, so that means semiconductors can still go a lot higher here. All right, and that's gonna be juicing up everything else. So if we look at this, okay, so this is just wave 1 right here. This is just the beginning. So let me get the sequential here. Okay, so you see all these counts here, all these counts. So you got the 9 and they got stuck, and then we had the first taco, the first real taco here, April 7th, right? After it jumped up, it just kept going. So once it got past this red line, it was like, oop, we go right to the red line, we get stuck, right? Do. This was kind of like my boxes. You remember my yellow box and my blue box on top? This was like underneath the yellow box and blue boxes. And then once it gapped up, it was like, oop, we got above the yellow and blue boxes. After that, it just ran up, right? Because there's nothing to stop it. So this was around 340, jumped up to around 360. Okay. So it was still in this red area though, right? So remember, we got to get to 395. Okay, so every time it kept going up, 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 it kept going, it kept going, it kept going. You see here in April 15th, you see that? If you were watching that live, if you were watching that live, you saw that it was trying very hard not to crash that day. I don't know what was going on particularly in that day, but at lunchtime, some people ran in there to buy it up, and then it started pushing itself back up into close. It was really close towards breaking down. Okay. And that was 395.09. You see this? Like it was on the edge. It was like it was going back and forth between the red and the green zones. Once it completed this, it was all in the green. It was all in the green. And after that, it was just way easy to keep pushing this up. That was the last chance anybody had to crash the market. That was it. April 15th, that day. All right. Okay. Oh my God. You want to leverage those? You are crazy. Hut to me is already leverage, man. You want to leverage a leverage? Hut, Iren are like scary already, man. What are you talking about? No way, bro. No way. I'm not gonna do that. You guys just want gamble. You guys want to gamble. That's all you want to do. No, 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 no. Besides, well, I already like you look at the ones on the scrolling on top. You already see that Oracle leverage, right? You have Cloudflare. Cloudflare leverage was up 14% today. The CrowdStrike and Palo Alto Networks was also very good. It recovered from yesterday's drop. So yeah, everything's scrolling on top. You can get Palantir leverage. Yeah, get all the leverage. You can leverage as much as you want on the other ones. Up to you. Depends on how much risk you want to take. You know, if you do it wrong though, you're gonna and the market starts dipping, you're gonna eat shit, right? It's gonna be painful. But apart from that, it's yeah, it's fine. But yeah, you can see right here that April 15th was the time that it could have dropped. It could have dropped. That's it. So let me show you the other chart here. So I'm gonna make you look at it from this way. Okay, let me take this off. Okay, so this is 15 minutes. So remember, this is taco. This was taco day, right? This was the Wednesday after Taco Tuesday. All right, and you can see how it moves. It's like sideways up. Okay, and then pop, sideways up, and then pop goes the next way, sideways, whoop. You see this? This one was about to go down. It was about to break the low of this April 14th. And then all of a sudden, there was like all this volume came in and stopped it. And then since then, this was middle of the day. Usually nothing happens in the middle of the day, right? Unless there's some news. And so most of the time, there's action in the morning and action at the close, morning close. But something stopped it from continuing to go down. And since then, we've been going up, 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 right? Goes up, pop, sideways, up, pop, sideways, pop, up. Now we're here. And there's a huge amount of volume up here before all the earnings today. Tomorrow is going to be Intel's earnings after the close. That'll be the big mama, right? One of the big mamas of semiconductors. So everybody's going to watch Intel. I have no clue if Intel is going to crash the semiconductors or not. If Intel is the reason we get a dip, then okay, I'll accept it. If Intel's going to pump it, okay, well, we have no choice. I got no clues for you about when the quote unquote dip will be, if there's even any dip right now. All right. That's going to be the problem. Okay. From what I'm looking at Bitcoin, I think Bitcoin is fine. Bitcoin's going to go up. So built to spill, I saw you had a lot of questions about if you want to sell your crypto. I think you're fine. Honestly, you can wait till freaking June. Okay. So we'll see how May goes, but I think you're safe till June. So see what happens but I think Bitcoin's okay. It's Bitcoin for sure. I don't know about Ethereum or Litecoin. I'll have to check those later, but I think if Bitcoin is okay, the other one should be fine. Let's see. And you also talk about this pharmaceutical. Yeah, I don't know, man. Pharma companies are hell. If you go to Martin Shkreli's streams, see if he talks about it. Anybody that does like pharmaceutical biotech companies, go see what Martin Shkreli says. So he has a channel, and there's like 2-3 replay channels, and maybe he talks about that particular stock for you, because most of the pharmaceuticals are event driven, right? I'm thinking. That's why you just look at a chart is not probably not going to help you. Yeah, yeah. You see this? This ain't going to help you because this kind of chart, you see, it's all about events. It's just like goes nowhere, pops on news, goes nowhere, pops on news. There's no real clue about it. I think you're fine though. The way it's basing here, if you look at this monthly chart, um, I think you're okay. As long as you can get through this huge bar right here. I don't know what caused this. Was it because of earnings after this earnings, or was there news after this earnings that caused that? I don't know. But let's say it can go up to 11, then you're fine. You're fine. It looks like it tried to, but it didn't make it. But okay, well, it depends on when what price I suppose you bought it. But yeah, go ask Skrelly. Go ask Skrelly. He streams, so you can go in his chat and be like, "Hey, talk about ZNTL. Talk about that. What do you think about that?" Because he goes over the fundamentals, and you'll need to know that. He'll analyze the drug for you. He'll be like, what he thinks about the drug, and then that, because that's something that we can't help you with, right? You have to talk to a chemist, and then even if you know about the chemistry and the pharmacology and all that, you have an MD, PhD, that still might not help you, right? Because then it's like, well, can it even be viable as a business? Usually these are not viable as a business. Most of these small biotech companies, they just want to get bought out by a bigger boy, right? That's what happens. They don't even care about running a business. They just want to be out there, and then somebody goes up. Let's see. Yeah, no F givens. That's right. That's what we got to know. Nobody cares. Nobody cares about the taco anymore. It's over. It's over. We're done. All right. Q. Yeah, yeah. I think you're fine. He'll take the drug and try the drug. Yeah, he might. He might. But yeah, Mark Skrelly's like the guy to go to for biotechs for sure. He'll know which lottery ticket. He'll give you an advice about what lottery ticket to get. Yeah, he loves shorting too, like these things. He'll be like, "Oh, this biotech company is trash. This can't be viable. He'll short it. He'll tell you which one is short." Uh, yeah, he loves shorting like the quantum computing stocks. He loved shorting those for a while. IONQ, he was like, "Short this, short this, short this." I mean, it's been going sideways though. It's like there wasn't anything worth shorting here. We haven't gone anywhere. I don't know. And if you look at this, I don't what happened here? Was there news? But it just cleared out. Look, this thing looks like it's gonna go up even higher. Yeah, I don't know. Quantum computing. Yeah, there's some other quantum computing stocks, right? Maybe we gotta look at those. If there's a big bubble, we might as well go into quantum computing too. Yeah. Yeah, that's right. He loves shorting quantum. He loves shorting quantum. Looking at that bar, it's like, whoa, 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 whoa. It looks like IONQ is gonna go up higher. We've been going sideways since December of 2024. So it looks like once we break 75, we can go even a lot higher, huh? So anyway, earnings for this one is May 6th. Okay, I'll watch this one for earnings. I'll definitely have to pay attention to these now, because a lot of people made a lot of money on semiconductors. They might start putting that money into other stuff like this, right? So it'll be easy to push up for sure. Okay. All right. Cool. Anything else? Anything else? There was some news about Micron doing this. I don't know what they're doing. What the heck? Okay, we got to talk about that, and then I'll play some videos. Okay, there's something about China. Okay, China. Yeah. All right. Okay, and then let me go back and look at this for you. So this one I turned on the volume profile. Okay, so let's look at the semiconductors again. You see, like, it makes these and then it pops up. So ever since the taco, first big taco, You got it's going in a range and it ends up higher and it drifts up and then it goes back to another range and drifts up higher, goes back, drifts up higher. Every time it ends up going higher. Right? This was the time in April 15th that if there was any chance of semiconductors, this was the day I think I said I was thinking about shorting. I was like, look at that. Look at this. Look at this. Look at this. Look at what it's doing here. It's like, I think it was the middle of the day. I was streaming, right? And I was like, well, let's see what happens at the end of the day. I might short it. Because if this thing kept breaking down, or let's say it just stayed below, right? This will be the first time it actually ended the day at the bottom of the range. Because most of the time it'll end up going to the top of the range, goes up to the top of the range, goes up to the top of the range. This time, yesterday it was kind of like it gave a fake out. There was like, oh, Pakistan says JD Vance, like they were like JD Vance isn't flying out, Kushner isn't flying out, nobody's flying out to Pakistan to meet anybody, and then the market started dropping, and this red candle started going down, and then just before close, a lot of people started buying back 15 minutes later and pushed it back to the middle of the range. You see, so every time you look at these ranges, you kind of go like, because semiconductors is more, it's just more clear to see the range. If I change this to like the S&P, like you don't see it. You don't see it. It's just like, okay, you got one range before taco, one big range after taco, and then it just melted up. It's just like it goes up in a line, right? It's not going sideways to make a range. So now it's been doing this, going stuck in this range since April 17th. But if you look at semiconductors, it didn't give that impression at all. Semiconductors, it was like, okay, stair step, stair step, stair step, stair step, stair step, stair step. It keeps doing this stair step. All right. Every time they keep like pumping it up, they're like, oh, buy Nvidia today, and then next day they go like buy Intel. Oh no, AMD. Then go to Micron. They go to this. Like they keep running around and recommending people buy this stock and that stock, and it keeps the semiconductor kind of like pushed up the next day, pushed up the next day, pushed up the next day, and that kind of spills over to the S&P and the Nasdaq, where it's just like it just has this like, okay, well, we're gonna keep it going sideways now here, keep it going sideways, we'll keep pushing it here. And so it's like, what the hell is going on? What? Nobody wants to sell, everybody wants to buy. Okay, keep buying then, I don't care, shoot. So that's what we gotta go. I think so many went bankrupt, like Yellow. Oh, I know Yellow, that trucking company. Yeah, I am only in transportation company reporting profits in 10 years, but some others have some gains. Like what was that? JB Hunt. JB Hunt reported earnings. Let me see what it's doing now. How it's doing now? Okay, so it reported earnings last week, right? It's gone up since then, pulling back a little bit. Let's see. Yeah, looks okay. Looks okay. Yeah, it looks fine. JB Hunt's doing fine. Oh, what's the next one that's gonna report? I don't know. I don't know what's the next big trucker to report. JB Hunt's doing okay. If I look at JB Hunt's doing fine as doing fine. Oh, yes, that's the only one, huh? Oh, everything else is bad? Let me look at the IYT. I think IYT index is kind of messed up right now because Avis is going up. What is it? Cars? Oh yeah, car. Look at this one. Look at this one. What the heck is going on here? Everybody was talking about this stock. It was like, hey, dude, what's going on? Oh, it's just going up like crazy. And it's down like 37%. They said they ran out of shares to sell. Like everybody was trying to buy shares and there was nothing left. And then all of a sudden it was just like it caused this huge move up. Like, what? What's going on with this one? It's like everybody was wondering when it's gonna crash because it just kept going up like this. It's like, what? Something's wrong here. They ran out of shares to put in the market or something. I don't know. It's crazy. So because of car, like I can like if you look at IYT, it's kind of like, is this real or is this just because of Avis? So yeah, I don't know. Yeah. So I guess I can't use the transportation index to give me an idea or clue what's going on. Uber's in it, right? Uber's in the transportation index. Well, Uber's still down there. Okay. Yeah. Fuck. Rug pulled. Yeah, I saw that yesterday too. I don't know. Something's weird. The only one that has assets, I should say, many are just brokerage. Okay. Mm. Yeah, Yellow went bankrupt. I forgot what happened to that one. Man, there was a lot of other trucking companies I was looking at. Oh man, I had a list. Fuck. Where was it? Man, I gotta look at that again. I got distracted by oil and gas. Then I stopped looking at that. I was like, oil and gas is fine. I don't need to look at trucking anymore. But I was about to look at it more closely. Then I just forgot. Then I just forgot. Let me see. SAIA. Okay, I was looking at that one. What else? Was there something else? No. Was that the only one I was looking at? Yeah, SAIA and JB Hunt. That was it. I don't know. I thought I was looking at some other weird ones, some like regional trucking or some um, short haul trucking. Did I put it in some other list? I don't know. I guess I gotta look at that. Yeah, JB Hunt's pretty good. Yeah, if you want some steady gains, that's the one. The other ones like Caterpillar, CAT, and what's the other one I recommended? CAT and freaking John Deere, right? DE. Yeah, John Deere. Those are steady. I think those will be fine. Those will be fine. I was thinking like, oh, should you wait for a dip? I think it already had its dip then. Deere. Yeah, it already had its dip with the thing. So let's see what happens here. If it can hold this level, Deer at 560, it should be fine, ready to go up the next move. And then Caterpillar, let's see. Oh, it already recovered and went up higher than that. They'll have earnings pretty soon, so I'll be watching those two for sure for earnings. Yeah, Cat and Deer. Yeah. Okay. Okay. Yeah, I'll have to look at it. I thought I did. I thought I really looked at it. Yeah, I know. I was watching his stream, his Zeus stream yesterday. Yeah, it was fun. So that's why I said like Deadman should just be covering that. I don't know what the heck. This whole Ruby stuff is taking over everything now in the Boyd. Oh man, crazy, crazy. Okay, good. Okay, this was the thing I was going to talk about. Micron. Micron is on board. Okay, so let me change my screen. Da da da. Let's go there. Stop it. Okay, let me get to that. And the last article, then we'll get to some videos. Micron Technology is on board with a proposed law making its way through the halls of Congress that intends to tighten semiconductor manufacturing equipment exports by U.S. allies to China. The legislation known as the MATCH Act, or Multilateral Alignment of Technology Controls on Hardware, intends to strengthen national security by closing gaps in export controls on semiconductor manufacturing equipment by U.S. allies such as the Netherlands-based ASML. A U.S. House of Representatives panel began a session on Wednesday to vote on the bipartisan bill. Micron has told lawmakers the U.S. needs to do more to inhibit the development of China's memory market. Oh man, Micron just wants to go up another 10x or something. Micron just wants to clamp down on China. Oh shit. Oh shit. Things happen now. The ones that survive. So wait, so do you think it's gonna be bad? The ones that survive, they're gonna be in a bad spot again? Is that what you mean? Or or do you think like there's gonna be a few that will survive and then those survivors will be the ones that will go up a lot because now they're the monopolies? Is that what you mean? No. Okay. No, to the first one. Good, good. So you mean they're gonna go up? Okay, okay, good, good, good. Okay, I'll definitely look into it. I thought I was looking into it. I thought I had more on a list somewhere else. Then I'll have to go check. Short haul or whatever. Oh yeah, those bastards totally want to fix prices. Yeah, I see. I see. Did you hear about the Amazon fixing prices? They were colluding with That's what you get for allowing Bezos to take over everything. Oh, Bezos. Anyhow, okay. Micron told U.S. the lawmakers in the U.S. They need to do more to inhibit development. Okay, China's memory market, citing people familiar with the issue. The memory maker has reportedly engaged with lawmakers throughout the drafting process. The Match Act especially targets China's largest fabs, such as those run by Shangxin Memory Technologies, Huahong, Huawei Semiconductor and Manufacturing International, and Yangtze Memory Technologies, including all subsidiaries and affiliates. If ASML was restricted from selling DUV, so that's deep ultraviolet immersion, but not DUV dry tools into China, that would limit the ability of Chinese chip makers to build out new production lines in their fabs. Uh-oh. Uh-oh. Okay. Okay. All right. I see. I see. The bill's primary targets are leading lithography and equipment suppliers, ASML, all right, and then Japanese companies Nikon and Canon. Oh boy. Mm, this is great. Great. Oh God. Uber is better. Yeah, Uber could be. I'll have to see. Uber could be. Uber could be one of the better ones that'll come out of this if they know what they're doing anyway. Um, all right. All right, guys. That's it. That's it for that. Let's go. Let's go some videos. Let's see how much time I got. Okay, maybe some 30 odd minutes. Let's go. So I'm gonna play this Intel one.
Clip is
Okay, so this one, Intel. So Intel, Samantha's really bullish, and we were talking about Intel for quite a while, right? I think, yes, I think, yes, you would be right. Microsoft, Oracle, Adobe look like they're about to rise. Correct. They all in the IGV. Yes, yes, yes. Oracle especially looks ripe. Yeah, but then Microsoft earnings will come up pretty soon, right? Next week. I think Adobe's next week too. Okay, yeah. Who knows? But anyhow, yep, 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 yep.
and then I want to talk a little bit about the market price targets. But for right now, just kind of showing your attention here, this red trend line on a weekly. We started talking about this when it was in the 22 handle. It was before US government as venture capitalist theme came in with Trump. Anyway, I did some analysis on its book value and said we just really needed to hold this 37 level, basically 40. It's easier if I put it on a monthly actually to show you. There you go. So it exploded higher from 22, which was under book value, moved into this trend line, which was very important. To hold 37-ish, and basically in order to hold that, it would become a double, which is kind of a rule of thumb on these descending monthly trend lines. Anyway, long story short, I had 40 as consolidation. Many of you know that because it did a lot of dipping on occasion. It would go up to 40 and then it would come right back down and then go up above 44 and then come right back down to 35, and then it would go up and then come right back down to 37, but it was 38, but it was coming, and you could see that the turn had already begun and it was consolidating, maybe aggressively, but still consolidating in that 40 neck of the woods. And it did great as my theme of US government as venture capitalists, not allowed to go down, if you remember all that. All right, so I'm showing you this on a monthly, but this was when I started writing up about it, and it was a little before December. But Intel, gorgeous bounce off of its 10-week, and I always refer to swing and trend trades as being strongest if they can hold their 10-week. Even if they come back down in volatility to whatever event, earnings, macro, I don't care, some headline driven risk off event, if they close above their 10-week, they're still in play. Anyway, this bounced off its 10-week at 35 on Q. This, by the way, was December 2nd. Getting back above 37 monthly, this monthly support area, and then 40 monthly trend line resistance area. And you had to be patient. It took a few months. Anyway, this was a bullish thesis that I had that it was going to move higher. And then specifically, I was referring back into early November, December timeframe that Intel had a market cap of 190 billion, a book value of 106 billion, which was roughly 22 a share. Remember that? And it was undervalued. So it had literally doubled from 22 to 40 area, but I still said it's not done. US government as venture capitalist is the theme, and it's just not going to be allowed to go down. So I went and kind of updated this theme that basically gave $53 a share based on over 200 billion worth of advanced fabs, IP, and other assets on the books. And if large tier one external foundry customers such as Apple are to come on board in 2026, then we were looking more like a two-time book value of 250 billion market cap, which was $53 a share. All right, so this is all in that kind of value rotation, but also US government as venture capitalist theme. And again, the companies that are just not allowed to go down. So Intel was one of them. I updated again in January because it was doing now a lot better. And basically 40 is that digestion zone, but I still have 51 into 57.60 this year. Now, that was it. I really was kind of more conservative, but I had 57.60 this year. Obviously, we're April and Intel has moved aggressively into that $70, which is basically that 2 times when we get above a monthly trend line. It takes months. But the point is, it gets above the monthly trend line, it can double. And we're really very, very close to all-time highs, the 2000 drama of all-time highs at 75.63. So because I saw some of you talking about how it came down a little bit the past few days, I wanted to zoom out and remind you of the big overarching theme. So macro, US government as venture capitalist. This name is not allowed to go down persistently. Kind of like an MP, which is the rare earth Department of Defense took a 40% stake in it, etc. Second, fundamentally, it really, really was undervalued at $22 a share. It was a good double. Once it got to 40, it held violently a little bit from 33 to 44, but the point is it was still in play, and then it's doubling again. I'm not at all surprised to see option activity come in, and I want to show you how to look for that in case you're curious. In Slack, you can kind of search Intel and you'll get this list of stuff. If you want to just look by option flow or something I wrote about it, for example, if you want to see that's where I found and pulled forward those prior prints on Intel to show you, just screenshotted it. But here's Intel, which is not really that.
So you see like how advanced Samantha is right here. Like she's
just
like
a tool.
like she's like got all these damn analysis of all these options and stuff. She has a whole team dedicated to this stuff. I don't have that, right? I don't know what the hell. So I need a team to do the options flow and all that. But I think the major thing pointed out is that like people really think this thing is just going to go higher and higher. If they're willing to buy options at a strike price of $75, that means they're betting that will go way above $75. I don't know. Fucking crazy. I mean, this is going to be wild here. This is going to be really wild. I'm really curious to see if Intel's really the one that's going to push everything up even more crazy. Okay, so NVIDIA will not report earnings until way later. It's usually far away from all the main ones, right? Apple, Google, Microsoft will report first. Okay, Tesla's already reported, so that's the major. Meta too. NVIDIA will report like sometime late May. So they're probably not gonna, nobody's gonna be talking about it until everything happens. By the time Nvidia reports, it's probably Nvidia's gonna follow AMD and all the other ones that already reported earlier. So AMD, Intel already reports, and it pushes up the market up, and then Nvidia will go up, and Nvidia will be at a higher price, and then people will be wondering, wait a minute. Now Nvidia's at this price before it reports earnings. That will probably cause the market to drop again, because Nvidia will report earnings, and then they'll be like, wait a minute, Nvidia's price is way too high for its thing. It'll go down, it'll zigzag. Broadcom will report, push it back up, something like that. Micron will report, push it back down. That's probably what's going to happen. Everybody's going to push up, okay, into May, right up into Nvidia's earnings, and then it'll go down. That's what happened last quarter. Everything went up and then got stuck going sideways until Nvidia earnings, and then it dropped. And then the Iran stuff happened, everything dropped more, and that was it. We got stuck in that lane for like nearly, man, yeah, we got stuck there for a while, huh? I don't know. IGV in a 3-month play, AIBU. So IGV actually has more Oracle and all the other ones. Okay, so AIBU WebL has more the Google, what else? Meta, yeah, that stuff. AIBU has some semiconductors, so it's not perfect. AIBU and WebL are kind of their own thing, but they sort of follow the software, not completely though, which keeps it safe because it follows more communications and some semiconductors. Okay, and that's why it keeps it safer. There is no leverage ETF that just tracks IGV. If you want that IGV stuff, then you add in like, yeah, the CRWL, PALU, and then the Oracle, right? Leverage, Adobe. You start adding all that stuff in there, and then yeah, that will make it act more like IGV for you when you add more of that. But of course, that's higher risk, right? They go up a lot when they go up, but if IGV thinks like it's time to puke, Palantir too is an IGV. Palantir is a big component of IGV, so that's the PLTU ETF, 2x leverage of Palantir. You can get that too. Add as much as you want to see, but yeah, they all have different risk profiles. Oracle is probably the one that I think has less risk per se right now until it reports earnings, because Oracle won't report earnings until after Nvidia. So you got a lot of time before Oracle reports earnings. Oracle can follow everything up, and then you can yoink and sell just before Oracle really reports earnings, and you'll be safe. You'll make your money and get out. You know what I mean? That kind of thing. So yeah, you have to look at the individual earnings dates, but yeah, I searched for Adobe. I couldn't find one. So I guess they're not sure when Adobe will really report earnings, but Microsoft will report next week for sure. I'm pretty sure Microsoft is one of the first ones to report from the software side. Okay, we had one report today, now, ServiceNow, and that one crapped 14%. So I think, yeah, you should sell before they report earnings. I don't trust them. I mean, you're gambling. If you already made enough money into the earnings, it's like, well, do I gamble and keep holding and hope like I get another 30%? I don't know. That's up to you. Now is down 14%. Look at that dump in CRMG in the evening today. I wonder if that portends down day tomorrow. Did they report earnings? I don't think so, right? No. CRM reports later. Let me see. Do they have even news? I don't know what kind of news they got. Did they say something? Huh. I didn't notice they were going to report anything. What the heck? So, oh my God. Maybe it's just because of ServiceNow, because ServiceNow is down 14%. Maybe like oh man. Yeah, so that's why, you kind of got to wait for the dip because you don't know about earnings. Hormuz might not do nothing. The Hormuz Strait, but earnings will. So I'm really curious about Intel, right? I'm really curious about that. All right, let's see. Blah, 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 blah. Nope. Nothing since the Google Cloud announcement this morning. So I'm guessing it's because of ServiceNow. So ServiceNow is down 14%. I'm not really a software cloud guy, so I have no idea what ServiceNow probably what they would have said. But if they said something bad about databases, maybe that's why CRM is going down. The other one is SAP, right? SAP is a big competitor of CRM, I think, or no, Oracle. So I don't know if it's a direct competitor then. SAP is a direct competitor of Oracle. I don't know if SAP is a direct competitor of CRM. Let me see. Okay, let me check anyhow. Let's see, Robinhood. Blah, blah, blah. Okay, let me see. SAP, is it down too? If it is, maybe then yeah. Now the now ServiceNow results probably killed that. Yeah, it's down 3.5%. Okay, ServiceNow said something. Yeah, they said something that made all of them go down. Then they said something bad, which is good. Probably means buy the dip. Buy the dip. I guess Tesla's going to use Intel chips. I don't know. Tesla makes their own chips. So Amazon even makes their own chips. So a lot of these companies make their own chips now. Intel is just the foundry. So what's going to happen is that Tesla may say, "Well, I'm not going to fabricate my chips in Taiwan. I'll fabricate them in Intel." Yeah, that's probably what you mean. They're not buying Intel chips. They're fabricating with Intel. Okay, so that means they're not using TSMC. They're gonna use Intel. That's probably what you mean. I don't know why what Intel, unless Intel is doing AI now, because they've been behind. They've been very behind. They missed the boat. Yeah, they're just fabricating with Intel, so they're not using TSMC. That's it. That's what the government wants. They want everybody to start using Intel as the manufacturer. So, and Intel is going to split into two companies. Intel is going to split into the Intel that designs the CPUs and their GPUs, and then the other side of the company will just be like TSMC 2.0 for America. That's it. So they will split. That's another thing about buying Intel. If you buy Intel stock now, you'll buy it before they split into two companies. Once they split, they'll go up even higher. Okay, that's just like GE. You buy GE before they split into three companies. GE split into three companies: GE Aerospace, GE Vernova, and then GE Healthcare. Okay, and then after they split, you see how GEV reported earnings today. Let me see. Some of these, yeah. So that's something we'll cover. Yeah, so I'll cover that. We have to wait for earnings. Earnings is tomorrow on Thursday. That's what's going to decide it. Anyhow, okay, let me remind myself I'm going to talk about GEV a little bit. Okay, but this one right here, let's go back here. Semiconductors is on a 15-day streak, okay? Record right here. We got a 1.35 ratio on SOX over the S&P. So I'll show that a little bit later, I think. But what I want to do is I'm doing the ratio here, okay, on the DeMark stuff. And let me get rid of this. So I want you to just focus on the wave. So I took SOXX divided by SPY. Okay, right now we are at nosebleed levels. Okay, but based on the counts here of the wave, we already hit our target, all right, of 0.57. So semiconductors outperforming the S&P already hit that level last week, all right? This was that April 15th area I was watching. If we were about to go down, this would have kept going down here. But then we recovered. So we finally started moving up again. So the semiconductors still outperforming the S&P. The target is 0.64. If Intel is good on Thursday and we go into Friday, then this thing can probably try to tag that 0.64. So Intel might be the one that will keep pushing semiconductors into next week into Jerome Powell. So Jerome Powell, right? When this thing goes right up, the market is going to go right up into Jerome Powell next Wednesday. Whatever he's going to say next Wednesday, that's when we buy. Because maybe he'll say something, probably, most likely he'll say something bad. I'm guessing. And that's it. The market is already flying so high, it's nosebleed levels. It's just going to puke or something. Or who knows, maybe after Jerome Powell, there'll be like Apple earnings and stuff. And they'll be like, whoa, like what else? What's another major one? Google probably be around that time. And it'll be like, whoa, or Amazon too. Amazon will report earnings Thursday, I think. Yeah, somebody's going to make it go down. So one of those is probably going to make it go down. So we'll see. But this Intel, if Intel doesn't give us the dip, then we're going a lot higher into Powell. That's it. The market is going to keep going. Is the idea that the major shifts occur at 9 and 13? See, that's the most people, they look at for 9s and 13s. They think it will happen there. No, like the way I look at it, that's what they teach me anyway, is that like once you start seeing the 9s pop up, you kind of want to see it continue the trend. So when we had this bottom here, we first because we had, you see, we got this last movement down here, the 9 counting down. That was like, if the market was going to keep on puking, it needed to continue on, right? But we immediately recovered. That was the Monday I told people to buy, right? The AIBU and whatever. So on like from that point on, we moved up again. So that was the Monday, right? We had the last move down, and then once we had Tuesday, it started flipping back up to 9s. So once you count 9, then you expect it to keep going 9, another 9, and then you keep going up. Once you start building enough 9s here, because that means it extends the trend. That means the trend is up until it's not. This point here, if this thing went down another candle or another bar, it would have started counting 1, 2, 3, 4, 5, 6, 7, 8, 9. If we completed a 9 going down and then it went and it kept pushing another count going 1, 2, 3, 4, 5, 6, 7, 8, 9, then most likely we're just going to go way, way lower, right? But it never happened. Never happened. As long as it keeps moving up and creating more, the more 9s it creates, the more 13s it'll create. So that's the thing. You want it to keep rolling like this. You see, this one is already at 25 because after the 9, it keeps going up. This is really strong, very strong. Rarely does it go past like 20s. The 20s. There's probably something that's going to happen here that'll stop this. Then that's my guess. So Intel would probably be a good reason for it to stop counting, and then we're gonna start counting 1, 2, 3, 4, 5, 6, 7, 8, 9 going down. If we start counting down to 9, we gotta break this dashed line. This line has to be broken. This line will have to be broken. And once you count like a 13, it'll create you a new target. So let me see. Yeah, the target is 0.61. Right? Okay. We're just below it, 0.60. Okay. Yeah. So there you go. So let me give you this. All right. Let me give you this. Let me give you the SPY. Let me just look at the SPY. Okay. Keep it like this. Keep it like this. Okay. So this is 78 minutes too. And you see this? It looks a lot different from semiconductors. It's not as bullish, right? We're just been going sideways. And the target, because it made this 4, now the target is 750. So that's why the title of my stream, I said like the S&P is going to go to 7,500. All right. So this thing, this bad boy here, that's the new target. If this is a real 4, like this thing has to not just go down again. If this thing stays here, then this 4 is solid. Then we're going to make a 5. We're going to make a 5 and it can tag this. That's just a projection. It doesn't mean it will get there. There's a lot of times it'll get like a little bit above and then fail and crap out. But there's a chance it can get to 750 and you should not be surprised because this is a 4. If this is a 3, this is a 4, this is going to be your 5. That's your target right here. And you can see like once it hit 24, right? This 9 count, 24, it like couldn't even get anymore. But then once we made a 13 based on the 9, this is the target, 714. We break 714 Thursday to Friday, then this is the next high we're gonna go to 750. Yeah. So that's it. And you can see down here, this was where we were like going down, down, down on the S&P. So it started making a 9. The 13 was based on that 9. We got another 9 here. We started counting, but you can see how strong this downward motion was into 16, and then it stopped. It immediately started going to 1, going the other way. Once you saw that, it's over. They lost it, because once you got 1 and 2 and 3, it's like, bro, you this whole day was going up 1, 2, 3, 4, 5. Oh no, it's over. It's over. They did not pull this back down. If they pulled this back down, they would have stopped this thing from counting. Once it started counting, the more candles it counts, it's over. It's really over. It's really hard to pull it back. So that's one way you can look at it, especially when you make a C5 here. Once I see a C5, yeah, that's a really strong bottom. And then when you see a C5 up here, that's a really strong top potential. So that's what I look for. I look for the C5s. I look for C5s. And this is with the 78-minute. Okay, so hopefully you kind of get it. It takes a while for you to see these things, but yeah, once you see them, you're kind of like, okay, I see that, I see this, I see that. All right. But that 4 is significant. Once it made that 4 yesterday, I'm like, uh-oh, I guess we're not making a dip anymore. That's what I'm seeing here. So Intel is your last chance to see a dip, I guess. If Intel doesn't give a strong dip so Intel will report after tomorrow's close, and then if Friday we still stay above here, then that means next week see you at 750. I don't know if it's going to be before Powell, but it could be before Powell, right? Before Powell, it goes like right to 730, 740. Maybe it won't get to 750, right? We only have a 3 days, right? Friday, and then Monday and Tuesday. And then Wednesday will be like, people were kind of like, well, I don't want to hold anything before Powell opens his mouth at the end of the day. But maybe you get Wednesday too. It'll pump up into kind of the morning. And then once after 1 hour in the morning, everyone sells to get out before Powell speaks. So maybe you get like 3.5 days, or 3.5 days that this thing can go up towards 750. It could do that. Yeah. Because right here, we're in the green zone. The green zone, it's really easy to pump it right now. And we're very far away from like the 6,800 area. So yeah, this bubble has legs, man. That's it. So I'm gonna play this. This is what Samantha said about Tom Lee. Okay, let's go.
This short clip is from a buyer's
Okay,
market fund. Basically to leave because escalation is about ready to begin. Anyway, hot war reports incoming is still not priced in because mechanical buying is still on the house, which we've talked about a lot. Something else that we talked about, if you recall, I did a midterm playbook crash up into a correction scenario, and this is from Monday's live trading room. Remember, I did this kind of strong earnings expectations led by tech in general, Micron in particular, are supporting market fundamentalists despite the U.S.-Israel war on Iran supply shocks. Don't be complacent. Midterm seasonality has its own ideas. All right, so this was what came from my live trading room. We just used it as a snippet for our Leduc trading channel on YouTube. Anyway, long story short, what do we have this morning? But Tom Lee coming in. I'm sure he's not in the room, but it's kind of funny. Anyway, he predicts the S&P will reach 7,300. I've got 7,190, but same idea. Could push all the way to 7,400, etc., etc. We really don't know because we have blue skies, which means we have no resistance above. That's the whole definition of blue skies. Anyway, then he predicts a followed 50 15 to 20% drawdown before rallying back up to 7,700. So kind of key exact turn of a phrase, which is that mid-election year playbook that I went over in detail Monday morning. Anyway, it's kind of ironic. This is how Wall Street works. And I mentioned that market memory, it's an auction of buyers and sellers, and it has a predictability. It has probabilities. And the probabilities are that we will have a 18 to 20% pull down, which is what I said on Monday, according to this mid-election playbook scenario. And then we will move higher 33%, 33 to 35%. And it has an incredibly strong hit rate. So in other words, the probabilities of this happening statistically are extremely strong. So that's why I pulled that up. And remember I said, wow, we could really have a pretty good pullback, maybe not to the May 2025 gap down, but it's a potential. And then we rally right back up into midterms. It's exactly what I said. All right. So anyway, we've got this making the rounds, which by the way, can also help this self-reinforcing expectation. So if Tom Lee says it and Mike Wilson is 7,600 guy, and we basically have a lot of Goldman Sachs, remember my piece a few weeks ago, generational buying opportunity, et cetera, et cetera. So what we have is a lot of folks that are still gung-ho during earnings season. And then we have some concerns, which is around the oil market. So let me just show you a few of the reasons why we could pull back 20%. And one of them has to do with kind of the earnings hype. Right now, I'm just showing you kind of the pre-market and talking through pre-market rant kind of stuff. Some of that has to do with earnings. We've got a situation where we do have AI, which is right now, as we assume, but we can also show it in data, that it is kind of masking a slowing economy. Earnings are very excitable. The expectations are higher, 15 to 20% growth ahead. Seriously, they chase this expectation and they drive the prediction markets also to get there. So it's an earnings bonanza as good as it gets, but it's very narrow, which is what I also talked about on Monday. It is very much a narrow market. I showed you some of these other charts, if you recall, from Monday as well, which is forward 12-month S&P earnings projections are strong, and they are especially strong for 2026, 2027 as it relates to tech. In reality, however, they're a little bit too optimistic, and this is what usually happens is then we miss it and the market painfully reprices. And then this is just kind of some other charts, basically economic indicators, all the stuff that I've shown you before, just kind of giving you a feel for once we get through the bulk of earnings season. Buybacks also are starting to trend a little bit lower. Anyway, we've got economic data that's also lagging, so that's not really going to help us so much as it relates to earnings and GDP. Sometimes they move together, sometimes they don't. Right now, we're pulling forward lots of expected growth, but then in reality, you have something like United Airlines this morning that said we had a stellar quarter, but our guidance for the future, we need to cut in half because we don't know what this is going to do as it relates to the oil price, jet fuel. There's no EV equivalent. I showed you this chart as well about how narrow the rally has become specifically with Micron. Remember that? Anyway, airlines are out saying, hey.
All right. So this sums up what I said at the beginning of the stream, right? What's contributing to the growth for the S&P, right, with earnings? Micron right there, 682%. Okay, for quarter one, going to 589 for a full year. Nvidia looks like 75% growth for the full year. Contribution to the growth 21%. So we'll see. So those two right now are pretty high up there. I think Micron might become the new leader. I think I read stuff right that says Micron now is the leader of what's driving the whole S&P up. So yeah, I don't know. Fuck. Anyhow, Anyhow, all right. I think that's all I'm gonna play for now. I think almost 2 hours. Okay, so let me do one more thing. Yeah, I took note of this built to spill. Yeah, okay. JB Hunt bought BNSF. Yeah, I remember BNSF from back in the day. Okay, I'll definitely keep this one in mind. All right, so they merged from rail to dry van and major potential there. Okay, so. Yeah, we'll see which of these truckers gonna be freaking man. I gotta look into more industrial stocks. I don't know. Once we get into a recession, don't know how much industrial stocks I really wanna. Uh, yeah, it's gonna be tough next few years. It's really gonna be hard to tell what's going on right now. Okay, so the other thing too, remember the ratio, right? Let's go back here. Let me do this long chart. Now you can see the full picture. This was the dot-com bubble. Okay, so from 98 into 2000, so March 2000s, you see the semiconductors started going bonkers from 98 to the 2000s. All right. And then since 2016, we start seeing this nice outperformance. So this is when I primarily started working like 2012 into 2018. So I was semiconductor industry here. So this was the good time, right? This was the good time before COVID. And then after COVID, it became like the bubble times. So this is like the insane times, right? It's like everybody started pushing semiconductors even more after COVID, right? Going right into 2021. And then we had a little correction because of Ukraine and interest rates going higher. And then after that, we started going up again. So if you look down here, look at the MACD, right? Look at the MACD. So every time we went back here, it was a time to buy. Goes up, goes back here, time to buy again. And now we're up here. We're up here. We've gone insane. Like this is where you would probably be like, oh, that's enough. That's enough. Semiconductors can't possibly go any higher. But the last 2 weeks has caused this crazy green candle, green bar. All right. So I have to wonder now, how much juice does this bubble have? If this is like the late 90s, like let's say we didn't know anything happened after, right? I just like I don't know what's happening. Like let's say we're here. I see this huge green bar. I'm like, well, it can't possibly go much higher than here. I don't think semiconductors can outperform anymore. I would be wrong. It just it just went up and up. So this bar might look huge, but there could be a bigger bar up later. If we really are in a dot-com bubble, like you might think this is the end, right? You go like right all the way up here. You're like, this is the end. This can't go up anymore. Oh shoot. This thing could go up even higher. Oh no, 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 no. So this is what I'm afraid of. This is what I'm afraid of. Like you look at Micron, you look at Sienna, you look at AAOI. Let's look at AAOI. Let's look at this one. Let's look at this one. Right, right. So last time I played this stock was here around 2017. So I bought it around here like $20. It got up to 90. And then it did this. It was like the bubble popped, and I said, "Oh shoot, I gotta get out. I gotta get out." Okay, we're up here, right? so 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 this thing is like doing this, and you're thinking like, "Uh-oh, if everybody's gonna chase this stock," and there's a lot of stocks like this, not just this one. There's a lot more, okay? And we're gonna have to. I'm gonna have to go through them. I have a whole list. If the semiconductors are doing that, then everything else around the semiconductors are gonna follow. This guy could go up to $800 from here, and it will be like, that's normal. We're in bubble land. So it's hard to tell, right? When the bubble's gonna end. It really is. Because this could be the start of the bubble. It's already a bubble, but the start of the real bubble, the final bubble, the bubble that makes no sense. That's how it felt in the 90s. It really did. It felt like, to me, when I was in the 90s, it felt like that. It just like when I first was starting to learn about stock markets in middle school and stuff, I was just looking, I was like, what the hell? Huh? What? This makes no damn sense. What? So let me just get the NASDAQ. How about this? NASDAQ. Let's see. NASDAQ. Let's see. Let me see. Okay, so this NASDAQ start making futures at 99. Okay, so I'm gonna have to use NDX. So let's look at this. Okay, let's go back. See, so 1985. So 98 was the big bubble here. So this is what happened. There was this big crash here in 98, in August of 98. The market went down 17%. Everybody that time thought it was over. We were going to keep going down. They guessed wrong. We recovered the next month. It went up 18%. Holy shoot. And that's when the real bubble started. So for the next 2 years, it kept going up. So I'm kind of wondering now, is this a repeat? Am I seeing a rerun? Okay, because if we just look at the ratio, all right, it looks like maybe we're just over here. Okay, or maybe we're just over here. We're probably over here, like January of 99, and then we go down, something like that. Like semiconductors looks like it's about to go up more, and then it'll fail. Like this thing will fail. There'll be a big red candle here for the SOX divided by SPX. It'll be something like that. And that'll trick everyone. Everybody will think, oh, it's over. The bubble's done. But that was a trick. So by the time October, November comes around and it goes down, that's the time to actually buy, because that will be your last chance to buy Micron, Sienna, AAOI, all that trash that everybody thinks is overpriced. It's going to go up higher in 2027. Shoot. Everything is set up looking like that. So remember, Samantha said, like, she agrees with Tom Lee. It's like we go up to 7,300, 7,400 maybe. We go down, pull back 20%. So that's probably what's going to happen. We go up into July. All right. And then we go down 20%. People think it's over, the end of the world. Stock market's going to keep going down. Then November happens. We have elections, right? Then it just rallies back up. So midterm elections, it just goes back up. Shoot. That's probably what's going to happen, man. And that's the real bubble. It'll just make this bubble look like nothing. You're going to see Micron at like $1,000 a share. Everybody's buying it. You're going to think like these idiots are crazy. We have no choice. We got to follow the bubble. We got to make money, right? So, it's going to repeat that whole movie again. So, and nobody learns anything. Yeah, that's the one thing you'll learn, is that like nobody learns from the past. They'll repeat their mistakes. So I might as well capitalize on it. So that's what I'll be watching out for. So light red, MACD histograms seems the time to buy. Yeah. This is because this is a long-term chart. Because it's a monthly chart, it's like it has less noise, right? So this is easy to tell. This is easier to tell, especially when you have a good trend. When it doesn't have a trend like here, okay, in this range, this is when semiconductors didn't have strength. That's what this means, right? And I can do the same thing with oil. I do the same thing with oil. I go like, okay, let's look at XOP divided by SPX, or SPY, whatever. This, you see, there's the trend is down. The trend is down. So that's why it's hard for people to believe that oil will actually finally do something, right? It got somewhere after COVID, but this was just because of the supply shock, and then Ukraine and Russia helping it out a bit. But then it continued its way down because everybody loves tech. Tech is better than oil and gas. Well, now it's changed again. It's like, well, is this time the time when it actually starts going up? Once it starts stopping this whole thing, then we can just look at it like semiconductors, right? This could be the beginning of the time when semiconductors stops doing this, like goes down, because you can see semiconductors was underperforming right here between the dot-com bubble and the 2008 crash. during this time, everybody was in real estate, oil and gas companies because of the Gulf War. All right, part 2, Gulf War part 2, and then so everybody was in Halliburton, right, and all that stuff. And then what else? Gold and silver. Gold and silver also doing good. Gold miners, silver miners, stuff like that. And so those companies were doing well. Tech companies were not doing well. So and real estate. A lot of people were buying real estate. That's what caused the bubble here to happen in 2007. That helped create that bubble too. A lot of people cashed out of the stocks and never went back into the stock market. They just ran in. They just took their money and ran into the whole real estate stuff. So this time was bad for tech. You see, now we're doing good in tech, but now we probably are going to have to shift gears and go into oil and gas, because this might be the time when oil and gas take over as leaders and tech companies are at the end. So we get one last squeeze of that lemon, in tech. But after that, we're out of tech. Bye-bye. See you. So after 2000, sometime around 2028, we'll be out, right? We'll say that was the last run. See you later. I'll be in Chevron, Exxon from now on, and yeah, move on. Gold and silver probably, and move on from there. So that's kind of like how it is. We're going to go into a different regime. We're changing. We're starting to change. We're starting to go into a different regime. And then we can go like, oh yeah, the MACD, every time it's red, more Exxon and Chevron or whatever. Yeah, sure. It could be like that. Could be. Definitely could be. Let me show you a picture. I'll show you a picture of this if I have it handy. And then we can close out. I guess I'll have to get to the Boyd stuff tomorrow. I had some Boyd stuff, but that was it. Let me see. Nope, wasn't here. Nope, wasn't here. Man, I got too many screenshots. Nope. All right, here it is. Okay. Okay, gold versus SPX. So take a screenshot of this. All right. So from the 1962, I guess, into 1980s, gold, silver, energy, oil were all going up. We could be at this time, right? The next time it happened that way was 2002 into 2013. Okay, so that was when oil, gold, silver, energy, all that stuff was going up. Are we entering that time again? If we are, then yeah, I wouldn't be in tech anymore. Tech is about to be on its way out in terms of stocks anyway. It's overvalued. Like there'll still be tech companies, but the prices of the tech stocks are no longer worth it. Get what I mean? Stock price doesn't necessarily have to follow what the company actually represents. There will be a time when people overpay for a lot of these companies, and it's really ridiculous to pay over like high prices for a stock, right? So I hope you understand. So we're going to be entering this time. I think everybody's going to go into oil, gas, and fertilizer and a lot of other stuff. That lithium, right? Lithium mine is rare earth, and That's where we're gonna have to end up in. It's not gonna be those tech companies in the coming 10 years, maybe. Who knows? It could just last 5 years. I don't know. Every cycle is gonna be different. But this time around, yeah, watch out. We're starting to go into this era regime. Okay, guys, I'll see you tomorrow. See what happens. We're gonna have to wait for Intel after the market closes, though, so I can't probably tell you what to do. We'll have to wait and see what Intel does. I don't think there's gonna be any news in Hormuz or anything that will affect things, but I'll see you then. All righty.